You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Good morning, Jim.
Interesting numbers. Our show last week was, is this the capitulation spike? And what does that exactly mean?
Well, a capitulation spike means, if that's what we saw last week, that just about everybody has given up on the long side that was going to get out, and the shorts are pushing as hard as they can and can't sell prices down any further. And then when the last seller is out of the market, then prices turn around. And so, as you remember, when we talked about a week ago Sunday night how things started turning around in a big way after they'd been down sharply that night. Next morning, when the trading started in New York, everything was just the opposite. Whereas silver had been down $1.50 the night before, it ended up over $1 the next day at the trading session. So the question was then, did this clean everybody out, and was this the low? And we still don't know if the lows are in. But looking at today's action, where gold is up almost $40 and silver is up close to $1, after having held most of those gains that we saw last week, it really gives an indication that there's a lot of fresh buying in here. The mining stocks themselves are reasonably strong, and not across the board. One stock that I follow dropped by 50% today, and I don't know why that was just yet, but I'll be checking on it later, some specific news to the company. But many of the others, the quality ones, are up substantially from where they were a few days ago. There was one in BC, a big, very high grade gold property, which announced a couple of days ago, actually I guess it was yesterday, that the largest Chinese gold manufacturer had taken a 10% stake in the company, putting in $81 million. So that's a pretty big deal, and I think you're going to see more of that going on. We've talked about how they did that with Pasco Lama, and now they're doing it with this company. So there are reasons for optimism, but still maybe not time to back up the truck, but certainly if you don't have a position by now, you're leaving some money on the table if you believe that we are seeing a turnaround.
Would part of the factor be that the U.S. dollar is down and the Dow is down as well?
That certainly is a factor. The Dow is down almost a half of a percentage point, and the U.S. dollar is. The Dow is down, was earlier today almost 200 points. This was certainly expected, some kind of a correction. We'll just have to see how deep it goes. But as you say, the dollar and the Dow, when they're weaker, that tends to bring strength into gold, especially after the decline we've seen for going over 3 years.
We haven't discussed palladium and platinum for a while. How are they doing?
They've kind of been moving to their own drummer. Palladium has been, of the four, has been the strongest, which we've been able to say that several times in the last year. And palladium just doesn't want to stay down. Platinum has been a little on the weaker side. So everybody is looking at the possibility of deflation with copper below $3, although it's trying to climb back up into that area again. So we're really seeing mixed signals. But, you know, I can't ever remember a major bottom where it was really obvious at the time that was the case. So we're assuming that this is the case. There are pretty significant voices out there that are saying we're not going to find the bottom in here, that it might take a few more months. But I really think that the coast is going to be much clearer by the end of this year. So we really have, the last day of the year is a trading day, the 31st of December. And I really think that we'll have a very clear idea of what's going on, whether this is the bottom is in, this type of a thing, by the last day of the year when all the tax selling is done and that type of thing. So buying the quality miners, picking up some physical metal makes a lot of sense to me, especially if you don't have a position. And if you don't have a position after all of this, then I guess maybe you won't ever decide to take one, but that certainly is up to the individual.
David, given the cross currents we've seen so far, and it's been a pretty rocky year, what's the most important thing you think a person might be able to take away from this?
I think the important thing is, regardless of what's going on in the markets today with high volatility, is to remain calm, follow the plan that you as an individual have decided you're going to do. When you see that quality miner that's selling at a good price, then pick it up. And don't have to go all in on it. Make sure your position sizes don't get out of balance. And remember that anything is possible, but there are a lot of signs in here that we really are approaching or have seen a major bottom. And when we get closes in gold, say above 1240, and silver above 1750 or so. That's not an all-clear signal, but it's a strong signal that there's a lot of buying pressure going on. And I think, Jim, to me, the most intriguing and powerful and important evidence that I've run across is the continued massive buying of the physical. Not only we are either unofficially or officially will, within a few days, set another annual record for American Silver Eagle sales. They'll be close to perhaps 43 million or maybe a little more. So we're sold already more this year than last year. And I believe the Canadian silver maple leafs will be in the same territory. I'm not sure on that, but I know they'll be very close. And then we have this incredibly massive buying going on by India and China of gold and silver. And so this alone, and I think that some of the people that are still bearish on the metals are missing this picture that the physical offtake is so massive that at some point it is going to hold up the paper shorts and say either deliver or get out of the way. And that's what's really going to break the logjam. So I think we're close to something like that happening, where more and more people realize just how artificial the paper prices have been all along, and the tail's going to stop wagging the dog once that change becomes pretty widely understood.
And I'm sure Germany is still wondering if they'll ever get the gold back that they had stored at Fort Knox.
Well, yeah, they seem to have backed off of asking for it. I think this is a behind-the-scenes political thing, with the U.S., but there are other countries that are starting to ask these same questions, and they're not only asking the questions, but they're saying, we'll take the gold now, not in 7 years. So that's another wild card. If it becomes more widespread, you're going to see more pressure on the Fed and the Treasury to start coughing up other people's gold. So it's been a long time since World War II, and why these countries are still allowing their gold to be held in New York, or supposedly held there, is beyond me.
David, thanks a lot for chatting with us.
You bet, Jim. It's going to be exciting watching how things play out through the month, and I don't think any of us should be asleep at the switch on this one. My guest has been David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.